Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of the 13th until the 17th of June. And before we dive into the webinar, the key highlights of the week was of course the US as well as the UK's interest rate decisions. As always, please note that all of the ideas discussed in this webinar are my opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So on this occasion, we're actually gonna kick things off with Forex rather than stocks as we do per usual. Given the events that we had throughout the week, I think it does make sense to just kick things off with Forex. As we mentioned during the intro, two of the key events for this week were the US and UK's interest rate decisions. The US released its figure on Wednesday, and the original expectation was a 50 basis point hike. However, the actual figure came in and hiked the rates by 75 basis points instead. And basically, this meant that the rates were hiked from 1% all the way up to 1.75%. Now, to demonstrate this on the charts as well, to see more or less what the reaction, the overall reaction from the market was following the release of the figure, we're going to look at the Euro US dollar, and I will switch this on the 30-minute time frame. We can also zoom in just a little bit, and you can pretty much see these candlesticks right here are basically showing you the price action prior, during, and after the release of the event as well. So you can see this was about half an hour before the figure was released. So throughout the day, we're pretty much selling off during the London session as we're coming closer and closer to the release of the figure. Then on the actual release, we can see we have this mixed reaction. We did get a slight dip into the low of the day. As we can see by this candlestick, it moved towards the lows of the day. We did breach them at some point, but of course we didn't close below the low. We just closed above it. We could say that some sellers were trapped here, people who were looking to sell short the breakout out of these lows and potentially seeking further and new lows throughout the day. But those were eventually trapped, and we can see that the market pretty much rallied ever since. And towards the end of the day, it pretty much closed towards the these levels right here, which is pretty much the highest level formed after the release of the event. Moving on to the next day, we can see it could have given the chance for sellers who went short right here to maybe come out of the positions if they held throughout the hours after the release and overnight as well. But then again, we also had an even stronger rally in the hours following the 16th of June instead, and we can see we even rallied all the way up here. Now, the overall move was about, so if we look here, we're at the 1.04s and we went almost all the way up, actually on the 1.06 exact round number. So pretty much a 200 pip move. So you can pretty much see how the market is absorbing the release of the figure. And now whether we'll get more upside or further downside, this is only gonna show in the next couple of days and weeks. But for the time being, we can just see pretty much the impact that the event had on this pair only, which is the Euro US dollar. If we look at other ones, we're pretty much gonna see some similar moves. And the next one is actually going to be the pound dollar, since we're gonna be discussing the interest rate decision from the UK. So this was the day that we had the US interest rate decision. And we can pretty much see like a similar movement, just like the euro dollar. So again, we had a dip. Again, this one, it wasn't into the lows because the lows were formed all the way down here during the EU/London session. And then as we came into the release of the US figure, we can see how even though it wasn't the lows, the move was similar in the sense that we breached a key structural level here. But we didn't close below that level, so potentially some sellers were trapped down at these levels. The actual candlestick of the release of the figure was mixed, so again we had some basically spikes towards the upside, then spike towards the downside. We did close to the lower end of the candlestick, and then we pretty much rallied and formed new daily highs. We did close the day quite close to the daily high, and then with the open the next day, again, we get a similar dip, just like with the euro dollar, giving the chance to some sellers here to come out at break even or at a slight loss. But we can see here we get a retest of the low of the day with this candlestick, and then pretty much we rally ever since. And for the pound dollar, the magnitude was from the 1.21s, we can say more or less, all the way up to the 124. So this one was a 300 pip move instead. So overall, we can see these big movements with the release of the interest rate decision, both with the US and obviously the UK once it's the one affecting the UK. We even had a slight gap forming in price given how volatile the market was at the time of the release. So once more, again, we can just see the impact that these kind of events can have if trading fundamental events, for example, is one of the niches of your trading strategies. So yeah, this is just to summarize the movements in the Forex market. If you want to look onto stocks, the semiconductor sector was among the hardest hit ones. Specifically, one of them was Micron Technologies. So we're just going to pull the chart now. Just going to see it right here. It's as if the interest rate hike wasn't already bad enough, but Micron Technology also was downgraded by Summit Insights from a buy rating to a hold. Now Micron's the reaction of those news with Micron share price, that we had a pretty strong dip that you can see right here. If I'll just zoom a little bit, again, we're still looking on the 30-minute time frame, but you can again see more or less we can capture the whole day's move even with the 30-minute time frame. And we can see the gap down after we had the downgrade from buy to hold. Now the actual move in percentage terms was 7% or more than $4 per share. So we can see we're pretty much trading even throughout the year. If I put this on the weekly time frame, we can see the impact on technology stocks as well. In general, it's not only Micron Technologies, but it's one of the examples that we're covering today. So you can see with the start of the year was actually forming almost all-time highs, and ever since we pretty much sold off from almost $100 all the way down to 54 and close. I mean, the next structure level is going to be close to the 50 mark anyway. So a quite considerable drop for Micron Technologies. Now another one that was in the spotlights was consumer stocks, and specifically on this occasion was Wayfair. Let me just pull this one instead. Now it wasn't the exact same reason. I mean, the overall sell-off did affect the overall market. It wasn't just these two stocks, but it's just these ones had some additional factors that could have basically enlarged the magnitude of the move, whether it was to the upside or the downside. But in our case, it's obviously the downside. Now Wayfair, the news that it basically had is that the company's CFO announced that he will retire from the position as a chief financial officer, and instead of being replaced by another CFO, he's going to be succeeded by a chief people officer. Now obviously this can be considered as some neutral news to some people, but the reaction from the overall market again was towards the downside, since the stock dropped by more than 9% or $4.50 per share. And just like we mentioned with Micron Technologies, even if we look at Wayfair, which is an entirely different sector, we can pretty much see the impact of the overall market is that with the start of the year, we're at this level, which it wasn't all-time highs as the case was with Micron Technologies, but you can still see that we've been pretty much selling off ever since. So the impact can pretty much be seen across the whole overall market and not just in one sector specifically. Next up, we're going to be moving on to commodities and oil prices first specifically. Now, at the time of recording the webinar, oil prices were set for a weekly loss. Now, this is something that we can say it would be expected with how the interest rates unraveled, because again, the original expectation was 0.5% hike, but we actually got a 0.75% hike. And seeing as how oil prices are denominated in dollars, and obviously will make it more expensive to be acquired, so we can expect demand essentially to worsen a little bit. But something that did keep a limit on losses is the fact that the US essentially placed further sanctions towards Iran. So this is something that could tighten supplies even further. and hence you can see that even though we had quite a drop, we're pretty much closing almost at break even throughout the week. But nevertheless, prices are down by more than 1% on this occasion. But again, it's more or less like a neutral week, just like the previous one. So we'll see even next week if we're gonna get a stronger reaction with regards to the news of the sanctions. And then lastly, we're gonna be looking at gold as well as the last one. And just like with oil, gold as well, because I mean we've mentioned on several occasions the inverse relationship that they have. But not only that, gold is not yield bearing, like it doesn't return interest when you're holding gold. But on this occasion, since the US dollar is returning interest, and quite a considerable one, seeing as again we jumped from 1% to 1.75, it could mean that investors are flocking onto the US dollar instead, driving demand outside of gold, and hence why we have this loss with regards to gold prices. Again, it's not super significant because again we did drop all the way to these lows, but we have recovered more than half of that drop. But prices nevertheless are still down by more than 1%, or $20.60. And yeah, there you have it. As far as the look back and review for this week, quite an eventful one. So I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.